All right, welcome everyone. Today we have Christian Viehof on our channel. He is the Chief Research Officer at Rudy Capital. And yeah, today we're going to talk about how Rudy Capital researches crypto community, protocols, and on what basis they decide on which protocol they invest in and where the risk might be too high. So, welcome, Christian. Why don't you introduce yourself? Tell us a little bit about your background and also what your role at Rudy Capital is.
Yeah, for sure. Thank you for having me. My name is Christian Viehof. I'm an executive director with ITSA, and I'm also chief research officer with Rudy Capital. Maybe shortly to my background, I studied economics at the University of Bonn with a focus on behavioral economics, game theory. Back then, I would have never thought that so early I could make use of it, because back then the job opportunities were quite limited. But nowadays, with like all the cryptocurrencies, there's a broad aspect of where you can basically apply that knowledge. And apart from that, I also studied finance at the Frankfurt School of Finance and Management. And basically in 2020, I was able to enter the blockchain space with my first position at ITSA, where we mostly focus on market standards, also in regard to security tokens and especially DeFi. And since I was back then falling into the rabbit hole of decentralized finance, so basically an alternative to traditional finance where you cut out the intermediaries by using smart contracts and decentralized applications, I then later got to know Thomas Faber and Philipp Schulden better, the two co-founders of Rudy Capital. They approached me and they told me, "Hey, Chris, we really like this stuff you're doing there at ITSA, especially in regard to the research in the DeFi space." And then it was like a perfect match. And yeah, I'm now for almost already like 1 year with Rudy Capital and in charge of doing mostly the research of new token projects, investment opportunities, risk management. So as you can guess, in a startup, it's very broadly distributed what you basically have to do on a daily basis. And yeah, that's what we are dealing with at the moment.
Yeah, that's super cool. And Thomas Faber, we also had on our channel a couple of weeks ago. Super interesting what he told us about his role in the company. And he also introduced us to you and told us that you are actually the one who is diving deeper into the different protocols, also different communities. So, when researching a project, is there like a certain checklist on how you evaluate a project, or what is like the first thing you look at when entering a new project?
Yeah, it always depends basically, first of all, where you find the project, right? So crypto, especially, I would say, is living on social media. So if I would have to name like three platforms, it would be Twitter. Back then, everybody was telling me about crypto Twitter, and I was always asking, wait, is there like an alternative Twitter app? But actually, it's just that you have to get into this bubble of Twitter, which is just about cryptocurrencies, and there's also then certainly some subsections like DeFi, where when you follow the right people, you will be fairly often updated on like new token projects. Alternatively, there's also Telegram or Discord. Discord is more like project based, so you will have to join different servers to basically get information about new projects. And same is also for Telegram. So basically, Twitter, I have to say, is basically the main source for new information for new project. For new project, and then essentially, you just go through the Twitter feeds. And I'm not the biggest fan of just following influencers. However, they are fairly good at placing new projects. Alternatively, I can also recommend to the audience to maybe just follow some developers. Let's say, for example, the Uniswap developers, the Aave developers. If they find something new that they find interesting, they will surely share it with the community. And then basically from there, you start already diving into the project a bit deeper. Usually that includes, first of all, obviously checking the website, going through the documentation, finding the Discord and the Telegram servers, and then possibly also engaging with the community and, for example, just chatting with some of the devs on the servers.
Okay. And in your role as the CRO, how many projects have you looked at it so far?
I would say quite many. Like, I'm on my Discord application, I think I have like 50, 100 servers I'm into at the moment. Basically, I'm also, I can really recommend also to keep deleting some of the servers you have joined after some time, because otherwise it just gets too blurry, like there's just too many projects going on. So I sometimes try to do some maintenance with on how many projects you're following, because it just has become too much. There's like every 2-3 days you will have like new projects launching, and the thing is, sometimes you have new projects which are completely new from the scratch. Then you will have other projects which are basically just forks, for example, of Uniswap or Aave, where they basically twisted maybe the tokenomics a little bit. And so there's not too much new to read up on those projects. And so, I really differentiate between those two. Basically like really like new projects which started from the scratch, entering like a completely new market, or let's say like opening a new market which hasn't even existed, or like alternatively copycats of like already existing protocols. One good example would be, for example, Geist Finance. It's an Aave fork on Phantom, on the Phantom ledger. And essentially what people were thinking back then, hey, we would like to provide services similar to Aave on Phantom. Aave has yet said that they don't want to deploy on the Phantom ledger. So let's just copy the code, let's deploy on Phantom, and then essentially under the name of Geist Finance, you suddenly had Aave code running on the Phantom ledger. And by that, I skimmed through, as I said, the timeline and basically built up a stack of like different protocols that interest me. And as you can guess, it's mostly like the projects that have just started from the scratch, which are the most interesting ones.
Right. And there you mentioned a quite interesting point, and also something that I've realized once you like followed a lot of people on crypto Twitter as well. You should always do some maintenance, and maybe in the end of 2 weeks or something, to kick out the accounts that are maybe qualitatively not that high, and also like don't add that much value, right? Otherwise the information overload is a real thing. And also on Discord, I am only in the channels where I'm actively invested in and really need the announcements to really follow the project and know what's going on. But I guess your scope of following the projects is maybe a little bit more complex than like for any like normal investor out there. But what kind of aspects do you look at before deciding that a project could be interesting for Rudy Capital to invest in? Because you guys focus on market neutral strategies, right? So I suppose the main focus of your research is kind of identifying potential risk of the protocols and also mitigating the risk in some way, right?
Yeah, correct. So essentially, adjusted risk returns is, I think, the key word here. The yield needs to be in a certain corridor, which is then interesting to us. This is probably like the most important thing. I would say, let's say currently we're yielding, I would say 15 to 20%. So if you would have to include certain other capital expenditures like hedging, for example, just a delta hedge on FTX, which would consume some more capital, let's say then we would have to look for yields, for example, between 20 and 30%. So it always depends on how efficiently the capital can be used. And certainly apart from that, we are very much focused on not having any kind of drawdowns. And as we both know, smart contract risk is prominent. It's available everywhere. It could be also, for example, Uniswap or Aave, which might have at some point have exploits or hacks. So what we will truly do at the very first is, after we have checked whether the yield is appropriate for our investment vehicle, that we also check, for example, for decentralized insurers, whether they will offer some policies on those protocols. And then especially we look for sometimes for also DPEG insurances, but mostly for smart contract risk. And there's I don't want to like advertise certain protocols. However, we have quite often contact, for example, with Bright Union. They made something very nice. Essentially, they looped the Nexus Mutual token through their protocol, which enables them to offer Nexus policies, for example, for, I would say, half the price or 1/3 the price that you would have to pay on Nexus Mutual itself. So there's already, I mean, those tools are still fairly small, but in my opinion, they're important and they are growing. And essentially, after we have checked for the main yield, we then check for insurances. And afterwards, I would say we dive also deeper into the protocol itself. There's different type of yields, I would say. There's like reward-based yields, where I think the word liquidity mining is maybe most appropriate. So the issuance of some type of rewards token for, let's say, for example, providing liquidity. However, there's also more of activity-based yields, like, for example, with Uniswap, where your return is mostly dependent on the volume. And you just were also asking for risks, right? So there's also quite some more other risks. Let's say, for example, governance risks. A good example of governance risk back then when Olympus DAO, which is like a decentralized reserve currency, was very popular. There was many forks going around where people tried just to imitate the model of Olympus DAO. And what happened quite frequently was that those DAOs were very poorly managed. And let's say the token, the governance token, has a market capitalization of like $1 million. However, in the treasury, there's, for example, $2 million. So what I could personally observe quite often was, for example, that there was players who started to buy the governance token. Let's say there's like 1 million market capitalization. I buy like for $500,000 now this governance token. And then they created a vote within the DAO to basically, pay out the complete treasury, which was at that time worth 2 million. Which essentially means that you could easily like double your money by buying the governance token and by dissolving the DAO. And essentially this would be regarded as some type of governance attack. So certainly what we also do is taking a look at the tokenomics. How is the token distributed? Who is the holder of the token? Yeah, I could really recommend also to the audience to maybe take a look at Messari. Messari has a very detailed like information on basically who is the investors, how is the token amount split among different parties, how much is, for example, for the community. And many people, I would say, dislike VC investments in the crypto space. However, I think it's not always fair. However, in many cases, like me personally, I think it was quite sad what happened with Solana and all the governance tokens there. But for me, VC investment also means there's a certain due diligence with such kind of protocols. So usually the documentation is way more accurate and way more precise, and the teams are also more responsive. So for me, this is something that I like to see, some type of VC investment. And basically at the end, we put everything together and then we decide together, whether it's a suitable investment or not.
Fair enough. Yeah, you mentioned, so what do you look at when looking at tokenomics? Because also when you do liquidity mining, I guess the yield is also relative to how inflationary the tokenomics are, right? So maybe elaborate a little bit on that.
Yeah, so there's different emission schedules, right? So there's some have like very high emissions at the beginning. Then there's something like initial like DEX offering, where in the first week basically they emit like 5 to 10% of the total emissions. Can be very often very attractive for like early players. That's anyway something that's like most crucial, I would say, in the DeFi space, that you just have to be early. So basically, whenever you are late to a party, I mean, you can still benefit from certain investments, but I would say like most money is really being made in the first few weeks or in the first few months. And you will always see different ways on how to distribute like a token among the community and also among investors and the team. The thing is, you cannot really say like what's like best practice, let's say like there's many different use cases. There are quite some token projects which have tokenomics, and with that I mean, for example, huge amounts for, let's say, team and investors with early lockups, where you are aware that the number of tokens held by the community maybe makes up just like 10-20%. And then essentially if the token is becoming quite popular among the community and the token is pumping, the price is going up, you can be sure that at some point there will be team members or investors who will take advantage of the situation, and they will just dump on their own followers. So I think this is really something like lockups and token distribution. I think that's the two most crucial things that we are taking a look at. And with that, you can always picture that it always depends on the specific use case. However, what I have been seeing lately, and this was really something where I was like, tokenomics are becoming way more tricky. So there was, for example, Aura Finance on Aurora, and they had very nice rewards. So essentially, what you could do is you could deposit USDT Tether, and then you could borrow USDC. You could sell the USDC against the USDT, and you could basically loop it like 3, 4, 5 times. And at the end, you would have received an APR of roughly 40 or 50%. However, the tokens were locked, so somewhat vested. You had to wait until like a certain lockup period. And essentially, the APR that was being displayed always calculates with the current price of the Aura token, which then again does not necessarily show the price that you will be receiving once you are selling the token. And then they did something which I found like, yeah, it put a smile on my face, I have to say it this way. They allowed you to gamble your vested reward tokens to have an early lockup. So I think there was something like you could place a bet, and with like 10%, you would have had an initial, like an instant lockup, so that you would be able to sell the reward tokens. Or with 10%, you would have lost all the reward tokens, and with 80%, nothing would have happened. Like, I think it was something like that. And it was quite interesting to see that they intentionally look for people who are willing to gamble and who know that they are taking a risk with like this vesting and basically how everything is set up.
Wow. Yeah, degen mechanisms at its finest, right?
Correct.
And I see that you said being early is super important if you want to make money in DeFi, right? But is there like a minimum market cap or something that the protocol must have before Rudy Capital invests in it? Or do you exclude high risk protocols by just looking at certain ecosystems? So what does the mechanism look like in that sense?
Yeah, I mean, certainly. I mean, we always try to be early with Rudy Capital, but if I'm honest with you, to be like among the very, very first is so difficult because, you know, you have like developers who will check on GitHub repositories. They will see when the code is pushed. And usually for good projects, I think early means already at like 1 million to 5 million market cap. This would be like, let's say, even VC invested project. I know back then, we were all internally discussing Angle, which is like a protocol with, for example, AG Euro, which is a Euro stablecoin. They try to build up different kind of forex pairs. So they would don't want to only provide like a Euro stablecoin, but later on also, for example, like a Swiss franc stablecoin and other currencies. And I think when we got into Angle and we were discussing the topic, they were already ranked. They were already having like 1 to 5 million market capitalization. And I mean, market capitalization is always one thing. I think TVL is also another metric, which is fairly important. But I have to say this changed a little bit because for such kind of projects, usually we don't provide liquidity. So liquidity provision. So for example, on Uniswap, would be mostly interesting for us in regard to like blue chip assets like BTC, like Bitcoin, Ethereum, USDC. Let's say there are certain tokens in the top 5, top 10 with like a certain amount of liquidity that are interesting to us. However, with such kind of projects, with the smaller ones, usually what we would do is we would go in there and then, let's say like with Aura, provide Tether, loop it a few times, and then basically take advantage of the incentive program, which basically goes for like 1, 2, 3, 4 weeks. But as I said at the beginning, we insure every of our investments, and that basically becomes tricky if those projects are very well known and highly regarded by the public. The DeFi, the insurers, they will be aware of the protocols and they will list them fairly early. And so essentially, whenever you see a DeFi protocol being listed on Nexus Mutual or insurers or other insurance protocols, this is also like a signaling towards the market, hey, this tends to be like a better project. So there's always like, I really go by that idea that there's different signals in the market. So VC investing for me means very likely not a rug, right? Because they will know like who are the developers behind this project. They gave them money, right? They have addresses, they have names, they have faces. The same is the case for like insurance protocols. There's also quite many smart people working there who are aware on the developments in the space, who know which projects are legit and which are not. So essentially, when there's like super small projects with like no names and there's no VC investing and no insurance, like we would never even consider investing into such projects.
Okay.
And this is mostly the case for the smaller ones, right?
Yeah, and I guess the kind of having like a VC stamp on the project also makes sense if you're like a company of your size, or also having institutional money to invest, right? Then you also have a lot more responsibility than the retail investors. And you also mentioned the kind of like insurance, that there's like a proper team behind it that is known to the VC. Are you also looking at the team behind the protocol, or are you looking at, I don't know, the VC stamp, or not deeper than that?
No, I mean, like, if there are names available, I have to admit, I'm personally always curious, just to figure out, okay, what are actually their backgrounds,
Mm-hmm.
For example, what I've recently seen was that the French community, like among Julien Bouteloup or like other developers, also like the Engel guys, I think there's many French people at the moment entering the crypto space with like an engineering background or like a background in statistics. Obviously, many of them come from top-notch universities like Grand Écoles, and background in trading, in high-frequency trading. Like you get after some point like a picture of like what's the typical profile looking like of such DeFi developers at the moment, and it interests me. However, I would not say that like I will try to scan their CVs to figure out whether they are the appropriate choice for developing such a kind of protocol. It's way
Mm-hmm.
more about what's the yield, what's the risk, what's basically their incentives to basically participate into the protocol. And then, as I said before, it's always a mix of like different signals where we take a look at, and according to that, we then place our liquidity.
Okay, fair enough. And that also means you're probably not investing for very long term. Like, what is the usual time of investment that you have at Rudy Capital?
I would say it really depends. There's certain strategies which we are now running already for quite some time. I mean, there's different websites, right, which show you how much fees are generated by what protocol. I think there's, for example, cryptofees.info, but you can also go on DeFi Llama
Mm-hmm.
and go there on like fees generated. Usually you will see that especially Uniswap v3 and GMX are ranking fairly high. Uniswap as like decentralized exchange, GMX also as perpetual exchange. So you can, for example, buy like 20 or 30x leverage on Ethereum or short it on that protocol. And those two are activity driven yields, which means that as long as enough users make use of such protocols, there will always be nice revenue streams. And therefore, such kind of protocols have become my favorite really now in the bear market, because I have to admit I'm missing the times, of like the bull market where you just wake up and you go on Twitter and like, I don't know, it's so active, so many new things popping up, suddenly like back then you could earn like 60, 70, 80% APR without any vesting on, for example, MIM, like Magic Internet Money by Abracadabra. Like such kind of investment opportunities are just gone, right? So this was also like a learning process, I think, for all of us at Rudy, where obviously we started with like certain like degen plays, and what we really now do is we dig deeper and deeper and deeper into the topics. And for that, for example, we also use Fura. Like with on-chain data, we pull the data from the validator,
Mm-hmm.
and then we extract certain ratios, for example, with GMX. I will just explain it very shortly. So essentially, GMX is like a perpetual protocol. So just like on FTX, you can trade like a perp on Ethereum or Bitcoin. And instead of having like a centralized player, you with the GLP index, you're basically the counterparty to any type of trade on the GMX platform. So
Mm-hmm.
essentially, that means that if traders win, and you are a liquidity provider in GLP, you lose. If they lose, you win. And we all know it, basically the law of like the big numbers and how trading essentially works. On average, they lose. So essentially, like all the people who are like perp trading on GMX will create a certain inflow of revenue into the GLP liquidity. And if we are part of the GLP liquidity, we will benefit from that. And there's, for example, certain matrices which are very interesting to us, which is the weights of the different crypto assets within the GLP. So the GLP has single-sided staking, which means that there's not like a normal LP with Uniswap where you have something like impermanent loss. So you will have some type of impermanent loss. I will come to that now. But essentially, you can provide any asset like a single-sided. And then what happens is that the traders will trade their perps. They will win, they will lose. And according to their profit and losses, they will change the weight of the GLP in the GMX protocol. And whenever those weights are changing, we will have to adjust our hedges, which we are running over via centralized exchanges, because they are just way cheaper. There's way more liquidity. And then basically we hedge on the centralized exchanges. We pull the data from the GLP, the weights from the losses and the gains from the traders. And then we regularly start adjust our liquidity position. And essentially, the better your data, the quicker your data, the better the rebalancing, the more profit for you at the end. And we are also discussing many things for what we might do in the future. I mean, there's a possibility of automating the whole process on chain. However, at the moment, it doesn't really make sense because on chain, you're just lacking the liquidity. So you could replicate it way cheaper with, for example, FTX or OKEx or Binance, and make the shorts on a centralized exchange and basically provides the liquidity in the decentralized protocol. But who knows? But at the moment, certainly what we do is we really try to dig deeper into such kind of protocols where we know it's activity-driven yield. Therefore, it's something we can plan with long-term. And therefore, data quality is everything. And by that, I think we have made already a huge steps towards like a fully automated strategy. And I think, there's some really good news that we might be able to post at the end of the year or at the beginning of next year.
Yeah, that's amazing to hear. And regarding your strategy, is there like a maximum percentage that you're willing to invest in one protocol?
Yeah, like that's the thing. I personally studied finance, and there's always the idea of portfolio management, that you should basically spread the risk by diversifying the yield. And we often try to do that. So we have really a cap of like 25% of the total investment per strategy. So we always try to maintain at least like 4, 5, 6 strategies, and always have some that we can basically include if one of them basically yields too low of a yield. But I have to admit, like it's happened already quite often that we really went to the limit of like 25% per strategy. Why? Because it's often fairly limited what type of investment opportunities you have at the moment. So it's not like a perfect well market like with ETFs and stocks, right? Where you have like indices with like so many different industries. It's like basically crypto is not mature enough at the moment to build like something where like the portfolio theory would really take advantage of. So usually what will happen is that you will rather miss out on some yield. However, we are still sticking to the at least 25% max to like one strategy. So it happens quite often that we are just running 4 strategies, but we usually try to maintain 5 or 6 so that if one is yielding too little return, we can just quickly replace it with another one.
Yeah, that makes sense. And also, crypto is not an efficient market yet. That's what makes it also quite interesting for investors, right? Otherwise, you wouldn't be
Correct.
able to create those returns with market neutral strategies. All right. And maybe to wrap things up, one last question about your private investment strategy. Are you also applying similar strategies as Rudy Capital, or are you a bit more of a degen in that sense?
I mean, surely, like the things that I have learned at Rudy, I also apply them from my personal investments, like the signaling that I explained before, whether it's like VCs or other things. However, what I don't do surely is like buy like insurance policies on all my investments, because it's just too time consuming. I mean, for Rudy, we really have the rule of no drawdown. So we are aware that like security is key. security is also the reason why Bitcoin is still the most popular cryptocurrency. It's the reason why institutional are feeling good with investing into Bitcoin. So there's certain things that have to apply for institutional, also especially in regard to investing. Me personally, I have to admit I made good money in the bull market. I'm also honest that I partially lost again some amount during the bear market. I think you will often read on Twitter about certain traders who only make gains. And don't always just follow that narrative, that there's always money to make. I also believe that there's sometimes periods in the markets where it's fairly reasonable to abstain the market for a certain amount of time. And I can, for example, say that from March, where I was still with some part of my portfolio involved in the Phantom ecosystem, to the day where Andre Cronje said that he was leaving the ecosystem with the wording of, I'm terminating 22 D-apps, which basically made Yearn crash, it made Keeper crash. So many tokens were crashing due to the announcement, which was something so externally where nobody had any influence on it. So it's not always that easy to have like a strategy that basically has zero to no risk. So there's always risks involved, right? And basically after this incident in March, I also said like I will basically take a step back for like 1, 2, 3 months. But then again, what I really like to do is buy crypto when there's so much fear in the market. So when Ethereum was going below $1,000, I was really thinking like, oh, where is this journey going? But then I started to slowly DCA a little bit again, basically into such kind of positions. You can also work maybe a little bit with leverage, but I also recommend people like be careful with the leverage. There's like this new Twitter page which is called, I think, Crypto Confessions. And I feel like every second confession is about somebody in the age between 20 and 40 who just used leverage and they lost all their savings. And I mean, essentially, that money is redistributed to people like Sam Bankman-Friedman. I don't want to like name call him now, but there's certain players that just benefit from such kind of systems. So my recommendation would be take a look at longer trends, whether they go down, whether they go up, right? Check for tokenomics, check maybe for other signals like VCs or let's say insurance policies that are available for the protocol or on the Discord, get to know the team. And certainly what's also very important is really look at the utility of the token. I have quite some friends who are very professional at trading meme tokens. I still haven't gotten how you would like figure out whether it's a good or a bad meme token. So I really try to abstain any kind of such investment. And then look for innovation. I think this is something that's really a key point as well. There's, for example, something called K at the moment. No financial advice, and I mean, always look it up yourself. But they, for example, right now do something called catastrophe bonds, where they make EPEC insurance for MIM, USDC, USDT, for example, and they want to provide a certain amount of liquidity. And as far as I know, they provide the most liquid DPEG insurances right now for MIM and FRAX, and I think some other tokens. So always look for something where you are like, well, maybe there's now some institutional investors who would like to do some MIM investments. They can, for example, not do it at the moment because they're not able to insure it. Now there is Y2K coming around. They have enough liquidity. So now there is certain investment strategies that could be maintained using Y2K. And suddenly like there's interest in the protocol and people are providing liquidity. I mean, this is always like the money Legos idea, right? So where can this protocol be useful? And but then also always question yourself, what are the tokenomics? How is the token being distributed? Are there other players which have a major advantage? Shortly, maybe the gobblers from Paradigm were like a super huge things where apparently once you have a monopoly on the gobblers, it's an NFT collection, right, which gives you like Go tokens, would be like so unfair that essentially they have all the market power and they can make all the NFTs. And so it's so many different aspects that always play into this. And always ask yourself that where does the yield come from? Because I really like the saying that if you don't know where the yield comes from, you are the yield. And I think in the last bull market, this was very often the case. Many people lost money. So I just hope that also the guys who probably made money just always keep checking on like many different things. Never rush things. Try to really like get a feeling for the protocol, and please never FOMO into tokens. I've also seen that so often where like people buy like the Pico top, of certain prices of certain tokens, and there's always losses, and yeah. So I think it's really a mix of many things. And as I just said, like I think I made fairly amount of money during the last bull market. I later on also lost some part of that again. Then I was basically abstaining the market a little bit, looking for an opportunity. Ethereum below 1,000 was such an opportunity. And then I think my two recent plays were certainly the Optimism ledger, and now Arbitrum is the next one that's currently unfolding. And then I think the narrative on crypto Twitter is also always very important. And yeah, one last advice is never marry your bags, because you will see that so often that there's hype on Twitter and the token will pump. You're sitting on like, I don't know, 5x, 10x. Start selling the token. At least get back your investment, maybe like 2x, 3x of an investment. Then you can keep still the rest in the protocol. But there's so many stories where people made money and then they just didn't sell, and there's like a drawdown of like 80-90%, and then they lost everything, and they are then basically back holders, and they are still believing at some point in the future it will pump again, and that's very often not the case. And so be careful with your investment and always do your research.
Yeah, thanks for giving us that overview and the not financial advice, I guess.
Yeah, absolutely.
Absolutely. And yeah, maybe one last question is, how do you see the macro playing out over the next couple of months?
Yeah, I mean, as we could recently hear from the FOMC meetings, was that very likely the job market or the labor market is still fairly robust. I like the memes that were going around on Twitter where they essentially mean like, oh, we have to hike it as that much that we will really like dampen like the labor market a little bit. So it seems as if there will be more rate hikes than initially expected, which I think is still fairly bearish. I don't want to comment on any political topics. However, I think with Mario Draghi also leaving Italy, who was basically a factor of stability, there's many Southern European countries which are very heavily in debt compared to their GDP. They will need refinancing, right, which will be also fairly costly. So yeah, right now many people were posting, hey guys, the bull market is back, and or let's say you will have a lot of uptrend in the next few weeks or months. I'm still very, very cautious, and I think also that it's very possible that the S&P 500 will make a new low. And yeah, I would assume that probably the job market, or let's say like the overall market, and also the downward trend of inflation will start in February, March. However, I think there's quite some better experts in the field of like monetary policy who should be like basically listened to. But as it seems right now, there's only little outlet to be optimistic on the macro side. Yeah.
All right. Thanks for that evaluation. And I think that's also a good point to wrap things up. Yeah. Thanks for being here, Christian. It was a very interesting discussion, and I hope to have you on here with Itza as well, maybe in the near future. And
Absolutely.
let's connect soon again. Thanks for being.
Yeah. Was a pleasure. Thank you very much.
Bye bye.